Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the overall picture, what's happening in the crypto space, and building the narrative that's developing around Bitcoin. And as per the title of this video, are we at the start of a bullish cyclone rally? And if so, what can we expect over the next few weeks and months? I'm also going to be having a look at the wider markets because they're also showing a very similar trend to Bitcoin. And we want to have a look at the 60-day cycle to show exactly whether we have started a new cycle or not. And also many people have requested for me to look at the end of the bull market. So we'll have a look at one of the Brexit indicators to see whether we have actually topped out or not. Or are we still in the middle of a bull market run for the next 6 to 12 months? So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Before I start to build up the narrative around Bitcoin, I just want to show you something very important on the bigger picture time frame. As you know, we always start with this default chart here, which is on the monthly time frame. And in many of the YouTube channels and the news out there, there are many people who think that we've come to the end of the bull market simply because we've had this little correction here from 73,000 down to 56,000. So let me just show you something that will help you to make up your mind. I think there's a song in there somewhere. I think it's from the 1970s song, The Streets of London, and that brings back a lot of good memories. So let's just have a look at whether this bull market is still alive and well based on the facts in the charts over the last 15 years. And for that, I have to go to the 21 simple moving average on the monthly chart. And as you can see quite clearly, once we get above the yellow line, the 21 simple moving average from the previous bear market low, we always get to the top of the bull market. And it's only when we cross back below it which confirms the end of the bull market. So that was the first cycle. The second cycle, exactly the same. At no point did we go below the 21 simple moving average until we get right to the top, and then this confirms the end of this bull market here. Similar thing happened here one more time. We had one confirmation here, and even in the double top in 2021, we still didn't close below this line, and we had that double top, and it was only confirmed after when we crossed back below the yellow line. And look what's happening currently. We crossed above it here, and I showed you this at the time, at the beginning of 2023, and then since then, we've been riding this yellow line all the way through. So for those people who think we've come to the end of the bull market, the evidence is in the charts, and it's up to you how you want to process this information. For me, there is a continuation going on. And before I build up the picture for Bitcoin, by looking at the various factors out there, I just want to bring everybody's attention to this. And that is that when you've just had a 20-odd% correction with Bitcoin, and with the Bitcoin miners, it's been around about 50 to 55%, and we see a reversal taking place, or the start of that anyway, for me, what I see is a opportunity here. And when I see an opportunity, I really don't want to miss that. And I've shown you this quotation before, because there is nothing that is more expensive than a missed opportunity. So what we have to do is to make sure that we have the mindset of taking the opportunities when we see them. And for me anyway, I see a lot of opportunities out there, and the narrative that I'm going to show today may well be one of these opportunities going forward. And the main thing is, these opportunities are not just for 1 week or 1 month, but as I've just shown you with the bull market, these take several months. And currently our narrative is that this bull market is going to run for at least around about between 6 to 12 months. So we do have to take that timeline into consideration. This is not a get-rich-quick scheme. So we have to employ the qualities of patience. Okay, so I'm going to start off with the CPI data, which came in yesterday at 3.4%, which was the consensus expected forecast here. And in the previous month, it was also forecast at 3.4%, but it actually came in higher than that. And that's what really spooked the markets for the last month or so. So when it's come in at 3.4% as expected, I think there was a level of relief from the markets that it's at least now going in the right direction. And this is what really triggered the markets to the upside. And if you want proof of that, this is the 5-minute chart yesterday when the figures were announced at exactly 1:30, as you can see down here, on this candle at 1:30. As soon as the figures came in, we got this big, massive Marubozu green candle that shot the price from around here before the announcement at 62,600 all the way up to 64,100. So that was a great catalyst. And as you can see, since that candle there at 1:30 yesterday UK time, 8:30 Eastern time, we basically followed that through with this rally at the moment, and the current price is at 66,000. And the question is, has that triggered a cyclone rally for the next few weeks or months? Only time will tell. So what are the other things that have been happening with Bitcoin? And what we had here was a couple of days ago, this news broke about the Wisconsin pension fund buying $100 million worth of BlackRock's Bitcoin ETF. And as this article says, we can expect more. And the reason why we should expect more, if you look over here, how many pension funds are there just in the USA alone? And as you can see, there are 304 state administered funds, and Wisconsin is one of them. And we know with the institutions, they don't normally act alone, because other institutions are always looking at what others are doing. And when you have one state pension fund moving in one direction, it's the talk of the tea breaks and the coffee breaks in all the other pension funds. And the reason why we can expect more of this buying, if you look down here, we know one thing with investors, and the institutions are exactly the same, is that they tend to move in herds, i.e. they have a herd-like mentality. When one goes, the others follow. And if this was replicated by the other state pension funds, what you would have is a demand of around about $30 billion just from the one set of institutions. So obviously a good start. So this is where a lot of the demand is going to be coming with Bitcoin over the coming weeks and months. Not just the state pension funds, but also other institutions are going to be lining up, and not just in the USA, but all around the world. And this will increase the demand for Bitcoin. And I want to show you something very interesting, what's going on with the Bitcoin miners. A lot of people are not aware why the supply of Bitcoin is going to be falling. The white line, as you can see, is the Bitcoin price, and the blue line is the total hash rate. And we can see that around the time of the halving, which was the 19th of April, it peaked at this point. But since then, this has been falling gradually to the point where we are now at this point here, below the 60.0. So why is that important? For the Bitcoin miners, their greatest cost to mining Bitcoin is the electricity cost. And in order to cover their electricity costs as well as the admin, etc., they're normally forced to sell some or most of their Bitcoins. So as the hash rate increases, they need greater computational power to mine each Bitcoin. But as this has now been falling, they're making significant savings on their electricity cost. Therefore, they don't need to be selling some or any of their Bitcoins to cover their costs. So therefore, if they're not selling, and after the halving, the supply has fallen from 900 to 450. So as the supply falls, we can expect the Bitcoin price to be going up. And this is why, as the halving has occurred, so the rewards that the Bitcoin miners are getting is half, from 6.25 to 3.125. The less efficient miners who are not able to cover their costs are switching off their machines, and the more efficient miners are getting greater rewards for less electricity cost. And you can see the confirmation of that total hash rate, that the Bitcoin hash rate has dipped as the miners have turned off their unprofitable machines here post the halving. And the reason why they've turned their machines off is that after the halving, and as you can see with this Mara pool, this is the pool which Marathon Digital Holdings mines its Bitcoins. Their reward for each of the blocks is now running just above the 3.125. Before the halving, this was around 6.5, 7, 7.5, 8. And now this is at 3.3, 3.2, 3.2, etc. So you can see this quite clearly all fallen. And some of the smaller miners with the less efficient rigs now don't have enough Bitcoins to cover their costs. So they're turning off their machines. And if you're wondering why the rewards are more than the 3.125 that you should normally get for each of the blocks, and that's because the Bitcoin miners get a mining fee that's on top of the 3.125, and that varies quite a bit. And that's another reason why the less efficient miners have actually switched off. And as you can see here with the Bitcoin fees per day, on the day of the halving, it reached all the way up to around about $56 million worth of Bitcoins per day. And you can see the rapid fall after the halving. halving, where they're getting only about 1.4 million. So this rapid fall has knocked out a lot of the inefficient mining companies. And I've been showing you this map now for many weeks, and this is the liquidation heat map. And these yellow zones here are where the stops are for the longs who are in leveraged trades. And the lowest one at the moment is around about 63,095. So at 63,000, we can expect the Bitcoin price to be in this range. So while we're expecting the Bitcoin price to go up, of course, nothing goes up in a straight line. So you may well expect this price to be a bit of a support line going forward. And as we know, Bitcoin has a habit of knocking out these zones here before moving to the upside. And we can see on the upside, we've got this zone here at 67,000. So it looks very highly likely we're going to be moving from where we are to around 67,000 to take out these shorts on this side. And moving on to the Bitcoin tracker, and what we have still is Grayscale bleeding a lot of the Bitcoins. So there's still an outflow going on to the point where now they hold 288,000 and they started off at 619,000. So this is one of the reasons why there's been a pressure to the downside on the Bitcoin price. But as you can see with the other ETFs, the BlackRock and the Fidelity and the ARK especially, with these three, they're more than making up for the losses from the Grayscale Trust. And if we moved on to the Bitcoin ETF overview and the assets inflows and outflows, in the last video I showed you this table here, and how red all that was. And look what's happened now. Since the last video, we've got more and more of the green appearing. So that means there are more inflows now coming back into the Bitcoin ETFs after a period of about 2 to 3 weeks when this was very much in the red. So this is now telling us that signs that an increased amount of inflow is coming into the ETFs. And if the Bitcoin price continues to increase, that's going to encourage more and more people to buy into the ETFs as well. So we can only expect this to now to remain in the green and to increase these figures. And one figure stood out here actually, the one by ARK. They're not used to buying so much of the Bitcoins. So while the Grayscale Trust lost 839 Bitcoins on one day, it was more than made up by ARK alone at 2,072. So certainly a very positive picture being developed now with the ETFs one more time. So as we can see quite clearly that what's happening out there in the wider world, which has an influence on the Bitcoin price, it seems to be a positive picture developing, and we may well be at the start of a cyclone rally coming up over the next few weeks and months. And if we move on to the wider money markets, we can see that this picture seems to be confirmed by the charts here. And we're going to start off with the dollar. And if we have a look at the weekly chart, I mentioned over the last few weeks that we had this particular pattern developing here of what we call an evening star, where the momentum comes to an end over here with a big green candle to the left-hand side. Then what we normally have is one indecision candle here, and this time we got an extension of that. So we got an extended evening star, two indecision candles, but then it's followed by a red Marubozu candle on the other side. So this is a very bearish pattern, which I've been referring to over the last couple of weeks. And as expected, we've come back to this next level here at around about 104. And again, we've got another red candle here, which is an outside bar bearish engulfing candle. So this is telling us that there is further more to go to the downside. So we may well come back to these levels here at the bottom of here, and we may come back down to this next support line at 101. So this is really playing out for the wider markets. So let's have a look at the SPX, and we'll be looking at the SPX through the lens of the 60-day cycle. And what we've got here is the confirmation of the start of a new cycle down here, because what we've done is we've moved above the previous high at this point with a clear daily close above it. So this now confirms as the start of the new cycle. So what we've got to do is now move the red line to this point here, and as this is the confirmation of the end of the previous cycle from this red line here and the start of a new cycle from here onwards, we can measure that, and that was a 72-day cycle that we've got here. So we can put that in our charts, and we have to move the white line to the 30 days from this point now, which takes it to the 3rd of June, and the 60-day cycle moves to the 17th of June. So we now have a new cycle, and what we can expect with the SPX is further room to go into the midpoint of the cycle. So what I would expect, just judging by the time framework of the 60-day cycle, for this to now go into the 30-day midpoint before we have a correction, and then a move back up towards the 60-day cycle low here, where we have another correction for the start of a new cycle down here. So in a bull market, we would expect a right translated cycle, i.e. a higher point from before the midpoint to after the midpoint. Moving on to the gold market, on the weekly time frame we had this gravestone doji candle here, which we were looking at as providing some sort of a bearish pressure to the downside. And we drew this little white box here, which was the 61.8 Fibonacci retracement, that this is probably where it's more than likely going to come back down to. And if we have a close look at this, this is really showing something quite bullish. So if we draw that Fibonacci retracement from the previous low down here to the recent high, you can see that this white box was at the 61.8, which is what you would normally expect even in a bull market. But when there's a very strong bull market, what it tends to do is that the retracements don't come quite close to the 61.8, but instead, because there are desperate buyers wanting to get on board, they don't want to miss out, so there's a lot of FOMO going on. So you find that the other Fibonacci retracement levels at 50% and the 38.2 tend to be the ones which are giving us the clue, the signal that the price is going to be moving much, much higher in the future. So what we've got here is a bounce from the 50% level rather than the 61.8. So again, gold is looking very bullish. And I know a lot of people request the silver chart, so here it is. And we seem to have cracked this one quite well in the sense that we've got these resistance zones here. We came all the way up to that 30 zone, followed by a correction back to the previous resistance as support. And now we bounce back and retesting that 30 level one more time. So silver now has a decision to make. Is it going to break to the upside, or is it going to have another correction with a lot of profit takers? And as you can see with most of the wider money markets, they seem to be moving to the upside, and we're at the beginning of a rally, as we can see from the wider information I've just shown you. So the chances are, the probability is that this is now going to break more to the upside and go up. And this brings us to the Bitcoin 60-day cycle, our favorite chart on this channel. And as I mentioned in the last video, we needed to get above this previous low here. So far, what we've got is that we had the cycle start here on the 20th of March, and we were going quite nicely here into the midpoint, but we had this correction all the way back down to retest this support level. And at this point, we got a failed cycle by closing well below the start of the cycle. So instead of going from down here to up there and creating a higher high after the midpoint so that we had a right translated cycle, failure to do that gave us the clue that this cycle is going to be a left translated cycle rather than a right translated cycle. So far in the last few months, we made a high here at 73,000, a lower high, another lower high, and another lower high here. And what we've now got here with this daily candle close last night, which is closed above this previous lower high, we now have a trend change to the upside. So as soon as you break the previous lower high, this gives you a trend change or a signal that the trend that was on the downward path is now showing signs of reversing to the upside. So while we can't confirm the 1st of May as the start of the new cycle yet, this is certainly the first sign. So this is why 65,000 was our first target that I've mentioned over the last few videos, that we need to break above that and close. And when we do, that will be the first test. And to confirm this as the start of the new cycle and to take this 56,000 off the table, as well as this 52,000, which we've been talking about over the last many videos, a break above the 67 will actually confirm that. And as you can see, we're finding resistance at that 67 mark. So we've been as high as 66,600 today. We really need to get above this 67 to confirm this new cycle. And then we can adjust our red lines. But at this point, this would be a very early start to a new cycle. Because from the previous cycle here, at the 1st of May, would take us to 42 bars. And that is still well within the realms of a full cycle. As we can see here, we've had a 43-day cycle at this point. And look what happened when we had an early cycle at that point. This is where the big move for Bitcoin started back in January after the ETFs. So if that is going to be an omen, we may well be at the start of a cyclone rally here, and only time will tell. And in recent videos, I've been showing you this wedge pattern here. And as I showed you before with this Bulkowski backtesting of the falling wedges, for confirmation, the pattern confirms as a valid one when the price closes outside one of the trend lines. And what we can see with the breakout is that whichever direction it breaks, but it is upward 68% of the time. So it breaks to the upside 68% of the time, as I showed you a couple of videos ago, that this is what I was expecting for the break of the Bitcoin price from that wedge to be a breakout to the upside. And it has duly delivered. And as we can see with this daily close here, we've broken through this wedge here, this trend line, these white lines here. And what you can get with these wedges is that the price can return back to the old resistance line as support before moving to the higher side. And this may well be the reason why the price may come back to that 63,000 on the liquidation heat map I showed you. So this is one of the reasons why you may see a bit of a range bound up to these points from 67 to 63 to take out the leverage players at 63,000 before moving to the higher side. So only time will tell, but certainly these are possibilities that could happen here. And if you want to measure where this could possibly go to the upside, all we have to do is look at the measure from the top of the wedge here and implant it at the break point, which is here. And that would suggest a target price for this wedge to be around about the 76,000 mark. So it should take out the previous high of 73,000. So this may well be the breakout that we're looking for. And when you have a look at the overall bigger picture strategy here, what we've been saying consistently, that it's more riskier to be out of the market than in the market. So those people who are waiting, and I mentioned in the last video, the title of that video was the final warning to those waiting for lower prices. And I mentioned in this video quite clearly that it's not a good thing to do to keep waiting for lower prices, and that it is much more riskier to be out of the market than in the market. So it does look now that with a higher probability that we're more on the way up rather than come back to any of these levels one more time. And as I keep reminding virtually in every video, that the whole idea of this bull market is to capture this whole move here. Don't worry about these oscillations along the way, because when you try to time the market, i.e. try to get the tops and the bottoms, this is where you will lose your money. And as long as you've got a 6 to 12 months view, on balance, it's better to ride these ups and downs in order to get to the end destination here where you can collect your treasure. And the question is, have we come to the end of this bull market? And I showed you at the beginning of the video the 21 simple moving average, but we have our special indicators which will tell us when the Bitcoin price is topped out. So it's now time for, yes, you've guessed it, it's our Brexit indicator countdown, where we look at around about 7 or 8 Bitcoin indicators, which should give us, with a bit of confluence between some of them, the end of the bull market where we may well have topped out. So we're looking for signs on a regular basis between now and the end of the bull market to tell us when Bitcoin has come to the top. And this week I'm going to look at the top cap, and this is the Bitcoin top cap indicator. And as we can see very clearly, that this blue line which has been weaving through the Bitcoin price over the last 15 years, it seems to hit the peaks when the Bitcoin price has topped out. And the last peak over here, or 2 peaks anyway, we didn't manage to get to that point. So the way to look at it is that it's not a failure on this blue line, because there's no indicator which is 100% proof apart from the pi cycle, which has given us 100% prediction for the last 15 years. But the way to always look at these things are always in terms of probabilities. So what we've got here is we've got in essential 5 peaks, if we count these two as one peak in terms of one bull cycle. And out of the 5, 4 of them are actually pretty accurate here, and 1 of them wasn't accurate. So what you've got is an 80% probability rate. So instead of throwing the baby out with the bathwater, what we've got is, at the moment, the blue line is well above the price of Bitcoin. So that's telling us that 80% probability that we haven't topped out yet. And when this price starts to move up here towards that blue line, and currently that blue line, as you can see in that box, is at 358,000. Now that's not my prediction. Before I start getting any funny comments, I'm just showing you what the facts are in the charts and eliciting that information and presenting it to you. What you make of it, it's your business. And if you've been watching my videos over the last few weeks and months, you'll know that I've been mentioning recently about the weekly stochastic RSI. Because as you can see with this, we have a pattern developing over and over again. And if I move this to the right, you'll see quite clearly that whenever we're below the 20 line, this blue line here, and we start moving back above the 20 line at this point, and at this point, etc., this is where the big rallies come. From here, we had one there, and you can see with this one here as well. So we've had these bullish rallies always at the bottom of this. This was the only one that didn't materialize because we had a failed cycle at that point. But as you can see, the next one made up for that. So what we've got currently is the green line now moving above the red line. But we can't really confirm this reversal until it gets above the blue line here. So we would expect either this week or next week, more likely next week, unless there's a big move to the upside here, for the green line to start protruding above the blue line. And that should be confirmation that we are on our way to a big cyclone rally here. And if we have a look at some sort of guidance on the previous two cycles, when this happened, from here to the high was around about 96%. And the last one that we had, which was at this point, we had another 90%, so 96 and 90%. And for those of you who feel as though they've missed out on these rallies in the past, and as I mentioned many times with the Bitcoin miners, they present an incredible alternative opportunity on a leverage play, because if you look at these two cycles with the Bitcoin miners, the first cycle here, the equivalent of Bitcoin from this bottom to the top, while Bitcoin went up by 96%, Marathon Digital Holdings went up by 336%. And in the last cycle over here, similar to Bitcoin, while Bitcoin went up by 90%, Marathon Digital Holdings went up by 135%. And if you look at one of the other major miners, CleanSpark, just in the last cycle, when we went above the 20 line on the stochastic RSI, the last move it had was well over 290%. So you can see that the Bitcoin miners, while they are volatile, they do come back down by large amounts. So when you get these big moves, then on the converse side of that, you do get the big moves to the downside in terms of corrections. So this correction here was 53%, and the current correction we've just had, that was 44% for CleanSpark. So you can see that there is much more volatility there, but certainly what the Bitcoin miners do is give an opportunity to catch up for those people who have missed on the Bitcoin rallies of the past. And if we have a close look at this trend line with Marathon Digital Holdings, what we've been doing, as I mentioned in the last video, is that we've been creating the higher lows around here and the higher highs. So there is a trend reversal going on. And if these rallies are anything to go by, even these mini ones in the middle of that, then we can expect quite a large move to the upside here. And we're really at the beginning of that move. And of course, nobody can guarantee what's going to happen in the future. And we can only go by extrapolating the information from the past to give some guidance of what could happen in the future. So what I see is a very good opportunity here for the Bitcoin miners to make very big moves for the upside now, based on all the information I've presented to you in this video, with Bitcoin, the wider money markets, as well as the wider information that's affecting the Bitcoin price. And if you want to join us with the Bitcoin miners, where we do 2 videos a week, plus on a daily basis at the end of each market close, I give you these market updates, exactly what's going on with the Bitcoin as well as the Bitcoin miners. And like yesterday, we had quite a lot of interaction with the members here based on what was going on with the CPI data and trying to interpret that and extrapolating the information from it. So you can see with these market updates, I try and give an overview of exactly what's happening with the miners, their prices, which ones are doing better than the others. And that helps to create these ratio trades that we do there. So apart from the 2 videos a week that we do on the Bitcoin miners, we do these trades. So as you saw with the Bitcoin miners as well as the Bitcoin price, while the price has been coming down, in the private member section, we've been doing trades. And these are the trades we've recently did in April, as you can see, between Marathon and CleanSpark, where we changed over from Marathon to CleanSpark at a ratio of 1.18. And then within 10 days, we moved back from CleanSpark back to Marathon. And this week, we moved back again from Marathon to CleanSpark. So we went from a ratio of 1.18 down to 0.93 and then back to 1.1. And I know many of the members got much bigger ratio than this. And so while the markets have been falling down, we've been able to lock in these types of profits during a falling market. And this is where the ratio trades are incredibly powerful. So we started off with this first trade here between Marathon and CleanSpark, where we sold the Marathon and bought 2,684 units of CleanSpark. And then after these swappings, we've ended up now with 3,084. So going forward, we're always looking for opportunities to do more ratio trades. But everybody has a choice whether they want to do that or just follow our passive portfolio that we've got running currently with the Bitcoin miners. And if you want to join the growing community of the Bitcoin mining private members section, then all you have to do is click the join button here, or in the description box you can see here the Bitcoin Miners membership join link. So if this button isn't working, you can always click that one there, and the price for that is £12.99 a month. So if you think that what I've just shown you is worth for the price of a coffee at £3.25 per week, then you can join the growing community of those who are interested in the Bitcoin miners. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.